Unit 2. Tax System. A taxable person is any person independently performing any kind of business at any place, regardless of its purpose or result. Cyprus offers one of the most attractive tax regimes in the European Union. A member of the European Union since 2004, Cyprus' regulatory regime is in full compliance with the requirements of the European Union and OECD. Greek letter alpha resident of Cyprus is considered an individual who stays in Cyprus for a period of at least 183 days in a tax year. A company whose management and control is exercised in Cyprus. Non-residents and foreigners are subject to special regulations that are often related to the taxation system of the country of their permanent residence. Tax residents, individuals or companies, are being taxed both on their income acquired in and outside Cyprus. Non-residents, individuals or companies, are being taxed only on their income acquired in Cyprus. Individual and companies resident in Cyprus are liable to income tax in accordance with the Income Tax Law, Law No. 118/I of 2002, as amended, in respect of their worldwide income. You can find the law here, in Greek. Other related laws and regulations. The Collection of Taxes Law of 1962, L. 311962, as amended. You can find the law here, in Greek. The Assessment and Collection of Taxes Law of 1978, L. 41978, as amended. You can find the law here, in Greek. The Special Contribution for the Defense of the Republic Law of 2002, L. 117/I, 2002, as amended. You can find the law here, in Greek. The Capital Gains Tax Law of 1980, L. 521980, as amended. You can find the law here, in Greek. The Immovable Property Tax Law of 1980, L. 241980, as amended. You can find the law here, in Greek. The Stamp Duty Law of 1963, L. 191963, as amended. You can find the law here, in Greek. The Social Insurance Law of 2010, L. 59/I, 2010, as amended. You can find the law here, in Greek. Residents of Cyprus have to pay tax based on their worldwide income, meaning their taxation is based on their taxable income irrespective of where it has been generated, within the national borders or abroad. In addition to the provisions of Cyprus tax legislation, the international treaties on the avoidance of double taxation represent an important mechanism for preventing double taxation of both natural and legal persons' earnings. Income tax is a tax on the income of individuals who are tax residents in the Republic of Cyprus. The personal income tax in Cyprus is one of the lowest top statutory personal income tax rate based on the Eurostat data. Individuals are subject to a scaled assessment rate on their annual income, starting with 20%, 25%, 30%, and ending at 35%, with the first €19,500 of income being non-taxable. Below are briefly described some of the main provisions of income tax applied to individuals. Income from the sources described below are not taxable under certain rules and conditions. Income from dividend and interest. Profit from permanent establishment outside Cyprus. Income from employment, salary earned abroad, outside Cyprus. Profit from the sale of securities. Loss from trade within the current year and or previous years is deducted from the taxable income, subject to certain terms and conditions. Income received in the form of retiring gratuity, compensation for death or injuries, provident fund, pension fund, or other approved funds, is exempted from tax. This is a table describing the personal income tax rates in Cyprus. Value-added tax in Cyprus is governed by the Value-Added Tax Law, L. 95/2000, which is fully compliant with the European Union VAT Directive. Liable to VAT tax are those entities selling goods or providing services within the Republic of Cyprus, and those importing goods from other member states and third countries. VAT rates are: standard rate, 19%. Reduced rates, 9%, 5%. Zero rate, 0%. VAT is charged on every supply of goods or services at the standard rate of 19%. The reduced rate of 5% is imposed on the supply of coffins, services supplied by undertakers, services of writers, artists, on the supply of fertilizers, foodstuff for live animals, seeds, non-bottled water, newspapers, books, periodicals, certain products for persons with special need, ice cream, certain types of nuts, salted etc., transport of passengers and their accompanying luggage with urban and rural buses, the letting of camping sites and caravan parks. As from the 13th of January 2014, the following are taxable at the reduced VAT rate of 9%, transport of passengers and their accompanying luggage within Cyprus, with urban, suburban and rural taxes as well as with tour and suburban buses. Certain supplies of goods or services are zero-rated, the supply, hiring and repair of seagoing vessels and aircrafts, the supply of services to meet the direct needs of seagoing vessels, the supply of goods entered into customs regime, the supply of medicines and food, except the supply of food in the course of catering. In addition, a supply of goods is zero-rated if the VAT Commissioner is satisfied that the goods have been exported or supplied to a registered person in another member state. No VAT is charged on supplies of goods or services which are exempted under the VAT legislation, leasing or letting of immovable property, the supply of immovable property with the exception of buildings or parts of buildings and the land on which they stand if the application for a building permit was submitted after the 1st of May, 2004, financial services, lotteries, medical care, social welfare, education, sports, cultural services, insurance transactions etc. Visitors from non-EU countries can claim a refund of VAT paid on their purchases of goods in Cyprus upon their departure from the country, provided that the purchased goods are transported outside Cyprus and the European Union in their personal luggage. Every individual company is obliged to register if, at the end of any month, the value of taxable supplies recorded in the last 12 months exceeds €15,600 or, at any point in time the value of taxable supplies are expected to exceed €15,600 in the next 30 days. Provides services to a VAT-registered person within the European Union with nil registration threshold. Is involved in the acquisition of goods from other European Union member states, relates to persons who offer exempt supplies of goods and services or are non-profitable organizations, with registration threshold of €10,250. Offers zero-rated supplies of goods or services. Acquires a company on a going concern basis. A foreign taxable person makes distance sales with registration threshold of €35,000. Taxes are paid by companies based on their profits, corporate income tax. However, once the profit is distributed among the owners or shareholders, these are charged capital gains tax, CGT. Capital gains tax, CGT, is imposed when the disposal is not subject to income tax, at the rate of 20% on gains from the disposal of immovable property situated in Cyprus, including gains from the disposal of shares in companies which directly own such immovable property. Further, as from the 17th of December 2015, shares of companies which indirectly own immovable property located in Cyprus and at least 50% of the market value of the said shares derived from such immovable property are subject to capital gains tax. In the case of share disposals only, that part of the gain relating to the immovable property situated in Cyprus is subject to CGT. Cyprus offers a wide range of tax advantages to companies conducting business on the island. Such advantages derive from the country's favorable legislation compliant with OECD and European Union requirements, as well as from the wide network of double taxation treaties with more than 60 countries involved. All companies that are tax residents of Cyprus are taxed on their income accrued or derived from all sources in Cyprus and abroad. A non-Cyprus tax resident company is taxed on income accrued or derived from a business activity which is carried out through a permanent establishment in Cyprus and on certain income arising from sources in Cyprus. A company is resident of Cyprus if it is managed and controlled in Cyprus. Briefly, the main provisions of corporate taxation in Cyprus are: uniform corporate tax rate of 12.5%, the lowest tax rate in the European Union. No tax on dividends or interest payments to non-residents, as well as residents not domiciled in Cyprus. No withholding taxes on royalty payments relating to the use of rights outside Cyprus. Favorable treatment of tax losses. No tax on profits from permanent establishment outside Cyprus, subject to certain terms and conditions. No tax on capital gains from disposal of securities listed on a recognized stock exchange market. No tax on profits from reorganizations. Tax-free repatriation of profits and capital. According to the new intellectual property regime, provisions of the new regime are effective from the 1st of July 2016. Qualifying intangible asset means an asset which was acquired, developed or exploited by a person in the course of carrying on a business and which constitutes intellectual property, other than marketing-related intellectual property associated with promotion, marketing, and which is the result of research and development activities, including an intangible asset for which there is only economic ownership. In calculating the taxable profit, an 80% deemed deduction applies to the profit from the exploitation of such qualifying intangible assets that is calculated based on a specific formula that follows the modified nexus approach. Capital gains arising from the disposal of a qualifying asset are not included in the qualifying profits and are fully exempt from income tax. The taxpayer may choose to forego the whole or part of the deduction in each year of assessment. Where the calculation of qualifying profits results in a loss, only 20% of this loss may be carried forward or group relieved. The capital cost of any qualifying intangible asset is tax deductible as a capital allowance. Immovable property tax has been abolished as from the 1st of January 2017. Cyprus international trusts enjoy important tax advantages, providing significant tax planning possibilities. Income and gains of a Cypriot international trust, derived from sources outside Cyprus, are exempt from any tax imposed in Cyprus. Dividends and interest received by a trust from a Cyprus international business company are not subject to tax, nor are they subject to withholding tax. Exemption from taxation in the case of an alien who creates an international trust in Cyprus and retires in the country, on the condition that all the property settled and the income earned is abroad, even if the individual is a beneficiary. A sole proprietorship, also called a sole trader, in Cyprus, is one of the most basic types of business on the island. Sole proprietorship means having a single owner that entirely manages the business company. This type of legal entity, according to the legislation in Cyprus, is not considered a legal person. Consequently, there is no distinction between the entity and the proprietor who assumes all the rights and obligations of the sole trader. Sole traders' profits are eligible for income tax, whether the profits are distributed to the proprietor or left in the business. The income taxation for sole traders in Cyprus: if the income earned is of maximum €28,000, the sole trader is taxed with a fixed rate of 20%. If the income is of maximum €36,300, the sole trader is taxed with 25%. For an income of up to €60,000, the tax rate is 30%. If the income is above €60,000, the sole trader in Cyprus is taxed at a rate of 35%. Subject to certain exemptions, capital gains tax is imposed in accordance with the Capital Gains Tax Laws 1980 to 2002, on capital gains arising after the 1st of January 1980, from the disposal of immovable property in Cyprus or shares of companies in Cyprus which own immovable property. Capital gains tax is imposed at the rate of 20% on gains from the disposal of immovable property situated in the Republic. gains from the disposal of shares of companies not listed on a recognized stock exchange which own immovable property situated in the Republic, and gains from the disposal of shares of companies which indirectly own immovable property situated in the Republic and derive at least 50% of their market value from such immovable property. In computing the capital gain, the following are deducted from the sale proceeds. The value of the immovable property as at the 1st of January 1980 or cost if the date of acquisition is later, as adjusted for inflation. The cost of any additions after the 1st of January 1980 or the date of acquisition if later, as adjusted for inflation. Certain expenditure incurred for the production of the gain. The government has introduced a variety of incentives aimed at attracting investment in industries that will enhance the development and reconstruction of the economy. These incentives are intended to encourage the development of new high-tech industries and skill-intensive products, reconstruct Cyprus' traditional economic sectors, improve productivity and labor skills, and attract capital-intensive foreign investment. The following incentives are available. Low taxation at 12.5% with zero tax on certain types of income. Industrial free zone and exemption from customs and excise charges for operations in the industrial free zone. Industrial training schemes. Subsidized industrial estates. Grants and other financial assistance to investors, particularly in the areas of energy, the environment, industrial development, technology, research and innovation, trade and services. Cyprus tax resident companies pay provisional tax on estimated taxable profits during the year of assessment, in 2 equal installments on the 31st of July, which is also the deadline for submission of the provisional tax return, and the 31st of December. The tax year in Cyprus ends on the 31st of December. Until the 31st of December a company shall submit the revised provisional tax return, if applicable, and payment of the second provisional tax installment. Payment of special contribution for defense on rent, dividends or interest from sources outside of Cyprus for the last 6 months of the year, if such tax is not withheld at source. Payment of the third and last installment of the premium tax for life insurance companies of the year. The reporting is done electronically, individual or company, via the TaxisNet system. Below you can see the home page of the website. Image 1, TaxisNet online registration page. The following are exempt from corporate income tax. Dividend income. Interest income, excluding interest income arising in the ordinary course of the business or closely connected with the ordinary carrying on of the business. Foreign exchange, FX, gains with the exception of FX gains arising from trading in foreign currencies and related derivatives. Profit from the sale of securities. Gains arising from a restructuring. Profits from a permanent establishment maintained outside the Republic. Rent from preserved building. Like most companies in Cyprus, it is advisable that also foreign investors leave preparation of the required tax reports to the experts in accounting services. You should prepare the submission of your tax return on time. In case of late submission of a tax return or late submission of supporting documentation requested, an administrative penalty of €100 or €200 is imposed. In the case of late payment of the tax due, a penalty of 5% is imposed on the unpaid tax. An additional penalty of 5% is imposed if the tax remains unpaid 2 months after the payment deadline.